Welcome back to my channel. So today we are going to discuss option selling which happened on Friday. So before that I'll just tell you what option selling is. So option selling are also called as writers or sellers. So they can be call writers or they can be put writers. So put buying or call writing. For these both, the price action is same. Price will go down. Call buying or put writing. Okay, these both are almost same. For this, the price action is price will go up. So basically, this acts as the put writers acts as the support and call writers acts as the resistance. Okay, so this is the basics. Now we'll do the price action comparison. I'll take Nifty chart on one side so that we'll get a better idea of how price moves and how decay happens. So Nifty was clearly downtrend on Friday, like after 4 days of sideways. Finally the breakdown has happened. This is 15 minutes candle here, so you could see this is the price action. So for 11th you will see here. Okay, so see, first half it was going down and then went sideways. Here also first half going down and then went sideways. Okay, now we'll check Nifty open. Nifty open was 250. We'll take 250, 25 to 50 as our open. So this is 17 expiry. So for the coming expiry, this is the open ATM price, and then this is put side OTM ITM. This is call side OTM and ITM. Since market was going down and then went sideways, so you could see max decay was in the ITM. ITM. Okay, I just made a mistake. So this will be the ITM and this will be the OTM for the call side. So this will be the max decay, this will be slightly decay, and here is the max uptrend, here is the less uptrend. Okay, so this is the pattern. Now let's take an example. So we know for Nifty one lot is 75. Okay, we might take any strike. Okay, here I am going to take some 800 strike. So 800 strike, OTM of the put is 10 rupees, right? So that is 75 times 10. So that is actually 750 rupees loss PNL for the strike put writing of 800. Okay, this is how we calculate. So this is the simple calculation. Now I will show you for Bank Nifty also. We'll take Bank Nifty open was 56,800. We'll go and choose 56,800. I just moved it. Okay, so here open was 56,800. We'll go and choose 56,800. Okay, so this is 800. This is our open ATM. So this is call side OTM and ITM. This is put side OTM and ITM. Okay, now here it is negative and here is the max negative decay. Here it is the positive decay. Here it is the max positive decay. Okay, so we'll take an example for positive decay. I'm going to take this strike 58,000 call writing. So for that decay is 100 points, right? So we know 100 points decay times one lot size for Bank Nifty is 30. So this is a profit of 3k. For the strike, 58,000 CE. Okay, this is how we calculate. This is the simple calculation. I will quickly go to the premium and we'll check the premium, how premium has reacted. Okay, so first I'm going to take Bank Nifty. Okay, Bank Nifty open was 56,800. I'll take both sides 56,800 range. So you could clearly see here from open decay was fast on the sellers side. So it's the sellers who are winning from the starting for 800. Now slightly improve the count. I'm going to take 57, 200 points apart, and here also from the start sellers were winning. You could see how the negative decay is more. Now let's take 600 strike, 56, 600, and see how it has performed. So here also sellers were winning from the start because the move was very slow, and Bank Nifty has a more delta value because this is monthly expiry. Nifty has faster decay while Bank Nifty has the slower decay. That reflects in our chart. Okay, now we'll go and check for Nifty. So Nifty open was 25,250. I'll take 25,250 start range as well as end range. And then you could clearly see here starting the decay was very prominent because IB was ranging in 11. So this is very common that the sellers will be on the correct edge to get the profit from the market. Okay, now we'll slightly take the 350 range, two strikes apart, and then here buyers are in the profit. Why? From exactly 11:10 the buyers came into the profit, or we say 10:45 onwards the buyers came into profit because markets were starting to fall. Now I'm going to take strike which is less, so 250, right? I'll take 150. Here also 150, and then you could see here how sellers are winning from the start because this is the inside strike. Okay, so this is how you calculate the price action. Now we would go and check the close range. Close range OI so that we can get some idea of where market can move. So first is Nifty. So you could clearly see here when you take OTM. So from seller's point of view, OTM is always great. 3.4 and 8.2. So too much of call writing. That means market is facing strong resistance. Here put buying has done and some profit booking is also been seen here. So here it's the profit booking zone. Okay, so this is the range for the week and this is the max pain. We'll go and quickly check for next expiry as well. So 50 and 39 clearly resistance is more in Nifty. We'll check Bank Nifty. So when you go to OTM, 107, 126. So slightly higher, slightly resistance. So this resistance can be broken soon if market does the profit booking. And here also you could see profit booking being done in the ITM zone of the put side. The covering is always the profit booking plus some put buying has been happening. Okay, so when put buy plus call writing is happening means market will be bearish. So this is an example. Okay, so that's it guys. Thank you.